Hey friends, welcome to today's Singapore Market Digest. I'm Iggy from the Investing Iguana, and today we're looking at some interesting movements in the Singapore market. Let's dive right into what's happening with some key players on the SGX. We've got some exciting developments from Keppel, Capitaland Ascendas REIT, Yangzijiang Financial, and Keppel Infrastructure Trust. Each of these companies has made significant moves that could impact their future performance. So let's break them down one by one. Keppel Corporation has been making waves with its recent divestment strategy. The global asset manager just sold its entire 42% stake in South Chiech, which is the developer behind the Palm City development in Ho Chi Minh City, Vietnam. The buyer is Vietnamese real estate company Gateway Thu Thiem, and Keppel managed to unlock total cash proceeds of 2.6 trillion Vietnamese dong, which converts to about 141.4 million. This divestment, which was completed in March, has resulted in a net profit of about 55 million for Keppel. That's a pretty solid return on their investment. This move aligns with Keppel's ongoing strategy to recycle capital and focus on their core businesses. For those who aren't familiar with Keppel, they're a Singapore-based conglomerate with businesses spanning multiple sectors, including property, infrastructure, and asset management. They've been around since 1968 and have grown into one of Singapore's largest companies. Looking at their current share price, Keppel closed flat at $6.90 on Friday. The stock has been relatively stable despite market volatility, which speaks to investor confidence in their strategic direction. The company's trading volume has been moderate, suggesting steady interest from investors. From a technical standpoint, Keppel has been trading in a range, with support around the $6.70 mark and resistance near $7.10. The recent divestment news hasn't triggered a significant price movement yet, but it could provide upside potential as the market digests the positive impact on their balance sheet. In terms of the broader real estate sector in Singapore, Keppel's move to divest from Vietnam might signal a shift in focus toward markets with more stable growth prospects. Many Singapore-based property developers have been reassessing their overseas investments in light of global economic uncertainties. The $55 million profit from this divestment will strengthen Keppel's financial position and potentially fund new investments in areas they've identified as strategic priorities. This capital recycling approach has been a hallmark of Keppel's strategy in recent years, allowing them to maintain financial flexibility while pursuing growth opportunities. Next up is Capitaland Ascendas REIT, often referred to as CLAR. The REIT's manager recently announced some exciting news about the completion of a major redevelopment project. Capitaland Group has finished the $883 million redevelopment of One Science Park Drive, which is a property located in Geneo, the Life Sciences and Innovation Cluster in Singapore Science Park. With this completion, all 5 buildings in the 1,600 square meter Geneo cluster are now operationally ready. This is a significant milestone for CLAR as it strengthens their position in the high-growth life sciences and technology sectors. The redeveloped property offers a mix of business space, wet lab-ready workspace, as well as retail and food and beverage amenities. This kind of mixed-use development is increasingly popular in Singapore, as it creates vibrant ecosystems where work and lifestyle blend seamlessly. According to William Tay, the CEO of CLAR's manager, this redevelopment boosts the quality of CLAR's business space and life science portfolio, while also enlarging its customer base in the life sciences and technology industries. These are sectors that have shown resilience even during economic downturns, which could provide CLAR with stable rental income going forward. For those who might not be familiar with CLAR, it's one of the largest REITs listed on the SGX, with a diversified portfolio of business and industrial properties across Singapore, Australia, the United States, and Europe. As a REIT, it distributes most of its income to unit holders, making it popular among investors seeking regular dividends. Units of CLAR closed on Friday at $2.67, up $0 or 0.4%. While this might seem like a small move, it's worth noting that REITs have been under pressure due to higher interest rates, so any positive movement is encouraging. From a technical analysis perspective, CLAR has been forming a base around this $2.60 level, which could serve as a support for future upward movements. The REIT's trading volume has been steady, indicating consistent interest from both institutional and retail investors. The completion of the Science Park Drive redevelopment could be a catalyst for Claire's performance in the coming quarters. As these new spaces get leased out, we should see an impact on their rental income and potentially their distribution per unit, DPU, which is what most REIT investors focus on. Moving on to Yangzijiang Financial, which has made a significant move in capital management. The financial arm of Yangzijiang Shipbuilding has raised net cash proceeds of $139.3 million through a placement of its treasury shares. The company plans to redeploy this capital for maritime investments, which aligns with their core expertise. According to their bourse filing on Sunday, Yangzijiang Financial agreed to divest its entire treasury shareholding of 193.5 million shares at $0.72 apiece. This price represents a 111% premium to its average buyback cost, which is impressive. However, it's also a 9.7% discount to the weighted average price of $0.7975 for trades done during the full market day on March 28th. The purchasers are two separate entities, Merlion K Capital and Opry Capital. The company expects the proposed sale to be completed by June 26, so we're looking at a relatively short time frame for this transaction. For those who aren't familiar with Yangzijiang Financial, it was spun off from Yangzijiang Shipbuilding in April 2022 to focus on investment management and fund-related businesses. The parent company, Yangzijiang Shipbuilding, is one of China's largest private shipbuilders. Shares of Yangzijiang Financial closed at $795 on Friday, up 1.3% or $1. This positive movement suggests that investors are responding well to the news of the treasury share placement. From a technical analysis standpoint, Yangzijiang Financial has been in an uptrend since the beginning of the year, with the stock price moving above both its 50-day and 200-day moving averages. This suggests strong momentum and potential for further upside. The trading volume for Yangzijiang Financial has been above average following the announcement, indicating increased investor interest. This is typically a positive sign, especially when accompanied by price appreciation. The decision to redeploy the proceeds into maritime investments makes strategic sense given the company's background and expertise in the shipping industry. The global shipping sector has been experiencing a recovery after several challenging years, and this move could position Yangzijiang Financial to capitalize on opportunities in this space. Compared to other financial services companies listed on the SGX, Yangzijiang Financial offers a unique exposure to the maritime sector, which could appeal to investors looking for diversification beyond traditional banking and insurance stocks. Last but certainly not least, let's talk about Keppel Infrastructure Trust, or KIT. The trust has announced that it will be acquiring a 46.7% stake in Global Marine Group, GMG, which is a leading subsea cable solutions provider. The acquisition price is approximately US $90.6 million. GMG provides mission-critical maintenance and installation services for subsea cable infrastructure. This is an interesting move for KIT as it expands their portfolio into the growing subsea infrastructure sector, which is crucial for global connectivity. KIT expects to harness Keppel's operating capabilities in the connectivity space to unlock value and drive enhanced returns for GMG. The trust is projecting that this acquisition will raise distribution per unit by an accretive 3.5%, which is significant for income-focused investors. For those who might not be familiar with KIT, it's a business trust that invests in infrastructure assets across a range of sectors, including energy, distribution, and storage, and waste and water. It's known for providing stable distributions to unit holders, making it popular among income-seeking investors. Units of KIT closed at 4.25 on Friday, up 5s or 1.2%. This positive movement suggests that investors are responding favorably to the acquisition announcement. From a technical analysis perspective, KKI has been trading in a range between 40 and 45 for several months. The recent uptick could potentially push the unit price toward the upper end of this range, especially if investors respond positively to the accretive nature of the GMG acquisition. That wraps up today's Singapore Market Digest. I hope you found this analysis helpful for your investment decisions. Remember, the market is always evolving, so stay informed and invest wisely. This is Iggy from the Investing Iguana, signing off until next time. Thanks for tuning in.